Hello traders, I'm waiting to buy again Dow Jones Index at 25614. That's a limit order right there, all right. That order is not yet filled. It will be filled when the price finally turn around here and start going up and crosses that level of 25614. This is a live day trading using the Elliott wave theory to trade the Dow Jones Index on a lower time frame. Now, yesterday I have a very nice discussion with a YouTuber on our channel. He did ask excellent question. I forgot his name, Ashraf, something like that, Ashraf. And here it is. So there was a little bit of a difference between his wave count and mine, which is normal because Elliott wave trader often disagree. That's normal. So I was saying that this is the first wave, second wave, and the third wave right there, fourth wave, and the fifth wave. We were calling this A minor wave or the flat correlation, B minor wave or the flat correlation, and my C minor wave was right there. And I said to traders that when we count 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, it becomes one of a higher degree. And then we go 1, 2, 3, the flat correlation become the second wave of a higher degree. But I did also mention that this is a speculative wave count. We are playing around with the Elliott wave rule. All right, we are messing around with the Elliott wave rule. So it's not a proper, all right, fully fledged, okay, Elliott wave analysis. But we know the Elliott wave rule, but we are using it just for the purpose for scalping, to buy and sell and make excellent trading decisions. Now, as I'm saying that, okay, the trader said that, okay, his wave count, okay, if I try to speculate a bit, because he was saying that this B wave, all right, for that trader, he says his fifth wave, all right. So this C wave of mine become his B wave, all right. Am I correct? No, this is his fifth wave. Okay, here it is. So I don't want to mess up my own wave count. So for that particular trader, his fifth wave is ending here, and his A wave is right there. So then he say this is the B wave, all right? Okay, all right, and we will expect the C wave after that, and before the price will go down again. It's okay. It's okay. Right? This is what the price had done. Now the price, you see, the price went down. So that trader, where I was saying is a point C for me, which is the second wave. For me, I'll be looking for an opportunity to sell here, but I did not sell it. I have a reason why I did not sell it. Why? Because it's a speculative wave count. If you look at the bigger picture on the 4-hour time frame, it's tricky to sell here because we are at the base of the consolidation. That's why we say speculative Elliott wave count. And another thing that I say to that trader is that when we are using the Elliott wave on the lower time frame, we must not stack on one time frame alone. Otherwise, you will get cooked. So you are playing with the Elliott wave rules, you are messing around with the Elliott wave rule, but you don't know what you are doing, or you forget about the bigger picture, you get cooked. That's why I don't want to be part of those that are selling here. I'm not saying that the price cannot go down more, but if I want to sell here, I want to see a clean cap break below, retest, and blah, 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 before I can sell that. In fact, I'm not in a mood to sell that zone in this zone. All right, that's me. I'm not saying that it can't go down, but that's just me. Okay, you understand? Now, okay. So for that trader, so he's that's his B way. So he'll be selling like us because we say our second way is ending here. So somebody that is following my step will say this is the third way. So that person will be selling like that particular trader. So a third wave can also be subdivided into 5 minor waves. So by the way, I told you that I'm waiting for my order to be filled at 25614. As I'm talking to you, I need to keep my left hand side eye on that limit order there. So you see, so we will be doing the same thing. So he will be selling during this session. I did not sell, but trade that are following my full step will be selling here, which is tricky. And then if the common settler is broken, people will be talking about the third minor wave or the third wave and so on. Okay, but just understand that speculative in your way count is risky, all right? One must know what one is doing. Another thing that is very, very important if you are still watching this video till this point is that, so a day before, all right, a day before, we had this speculative wave come 1, 2, 3, 4, 5, and then we talk about flat correction. We're expecting a nice move to this session, and then we continue with our third wave of a higher degree, yes or no? You remember that was that 2 there. That's the 2 there. We are moving back now, okay? And we were expecting another third wave here. One thing I need to say to those that are using the speculative area wave count, okay, very, very important point. Don't forget this one. Apart from using at least 2 time frame to see the bigger picture, one more thing. There is no continuation, okay, from one day to the next day. So as you can see here, often if you are doing speculative area wave count, you are just playing with it, all right? And you know what you are doing carefully, all right, jumping around. Understand that though you will, like here we were saying, first wave and second wave here and a third wave of a higher degree, very often you will not see a continuation from one day to the next day unless your wave count on the lower time frame is connected with a higher degree wave validation. So if I'm counting wave on the monthly chart and I break it down to the hourly time frame and then I break it down, okay, I'm counting wave on the monthly chart, then I break it down to the daily chart, and then from the daily chart, I break it down to the hourly time frame, and then from the hourly time frame, I break it to the 10-minute time frame. So my wave count on that 10-minute time frame is connected to the monthly chart wave count. In that case, my wave count on the 10-minute time frame is not as speculative as the normal speculative area wave count because it's connected with a higher degree wave count. But I need to clarify this all the time because I start talking about speculative area wave count, which is somebody who knows about area wave, but decided to play with it in a different way without worrying too much about every area wave rule. This is what we are talking about. It's just to play around because computers are doing that, high frequency traders are doing that, and there are all things going on in the market, and I spotted that these people are playing with the area wave rule in a speculative fashion. And we are doing the same thing. So like I told you, so what the gentleman was saying makes sense. It makes sense, okay? It makes sense. So if he or she, so like I said to you, so yesterday we stopped here, yesterday we stopped somewhere here, isn't it? So from one day to the next day, if it's not a valid wave count on the lower time frame connected to a higher degree wave count, don't bang on it that they definitely will have a continuation. So what I'm saying that, though here we call this one second speculative wave, the price does not have to go all the way and form a proper third wave, fourth wave, and a fifth wave. It may not do it because it's just a speculative wave count. So another day we come to them, if we are in a speculative area wave count mood as MOOD, all right, we will now, what we will do, we're not going to worry too much. So, okay, it's not that we're going to ignore what has happened yesterday. We are aware of it. But we come today, we look at it again, like I have coming now. It's crazy. This is what I say to traders, crazy to do the speculative area wave count without checking another time frame. Very important. So what I'm doing here on a 3-minute time frame has something to do with which time frame, the 4-hour time frame, the 50-minute time frame, because they are connected. Talking about top-down trading method, 4-hour time frame, 50-minute time frame, 3-minute time frame. So that's why I'm going back quite often. You see here, we were talking about the Fibonacci pattern, and I said to trader yesterday, though the pattern is messed up a bit, the price come down, don't ignore that Fibonacci pattern. That's why I still got my A, B, C, D here, because they will do all this, and then one day they come back again and start playing it up again. So I leave it there. I've seen it many times. So on the 4-hour time frame, which is the bigger picture for my 3-minute time frame, where I'm doing my speculative area of account, as I said yesterday, there is a consolidation from this top here, or this green line here, all right, at the top of the night of that's supposed to be the initial double bottom chart pattern. Price consolidating from there to here. So yesterday I mentioned to traders, as the market started playing around, I decided to buy here. I have one losing trade here because I draw a line at the closing price. You see this Kennedy bar? I'll draw a line at the closing price here. I thought that it will be sufficient for those bearish traders that they start cashing out here because of the consolidation. No, they push it down. And I was saying to traders, I'm aware of this tail here because they may lie to fill it. So now they feel it. You see, they feel the tail of this Tennessee bar. So instead of saying, this is the base of the consolidation, they say, no, bring it all the way here. So they bring it all the way to this low here. That's why I was saying to you on a 3-minute time frame, I'm not in a good mood to sell Dow Jones in this zone because of this tail that I see here. There's another tail here. It's a support zone. Doesn't mean that the price cannot go down as the other trader is saying. It can still go down. But I'm aware of what is happening on the bigger picture, and I don't want to be cooked. Though I'm using the either way like a speculative trader. That's it. So is it filled now? No, it's not filled, isn't it? So I'm saying to you, I'm still feeling waiting for this. So though, remember this, okay? Though I say to you, very often there is no continuation from one day to the next day. You should not forget what has happened yesterday. That's it. But don't expect that definitely there will be a continuation. Because if you get hooked to that belief that, okay, definitely today we're going to have the third wave, that can also force you to do things that you're not supposed to do. So 2 things, speculative wave count, mistake that you should avoid. Do not use only one time frame. All right. Second, don't bang on it. Can you use that in America? What's in America or in Bombay? Where are you from? All right, okay. All right. Don't bet on it. In fact, you shouldn't be betting. Don't bet on it. That definitely there will be continuation from one day to another. But don't forget what has happened yesterday. Remember it, but don't bet on it. So I'm aware of those things now. So I know that's what this is my second wave yesterday of a higher degree. So if they push it down beyond, so I'm watching it down. The only time that I will be a little bit interested to sell it, to sell the Dow Jones today is you see. Well, am I on forward? Yes, it is. Why the chart look different here? Am I looking at different time? Okay, here it is. So that's the tail here. So the only time today I will be a little bit interested to sell it is when they go below this low here. What's the low here? The low there is a 25444. No, 25440. 25440. That's the red line here. This one here. It's only when they break below and retest and give me a clear card sell signal. But by that time, this is a very important point. By that time, by the time the price reaches this level, that's a lot of pips gone. So I don't want to be the last person selling when the berry trader were enjoying themselves up to that point. So that's what I'm saying today. Today, I'm not in a mood very much to sell it. I may sell it, but when I'm doing so, I will be very careful. It's like you get 1 foot in the door and 1 foot out. And as soon as you see that they're going to kick you out, you run away very fast. You get a message, No, you get it. Okay. All right. So by the way, for traders say to me, John, record more speculative in your account. It's time consuming. You see it and maybe see the chart on live chart. Okay. It's time consuming. All right. Time consuming. But we will do that sometime. Okay. depending on how I told you that because I was sick this week and so on, so to revigorate my body, I need to talk a little bit more. So I'm sitting down talking to you for 1 hour, and then okay, that's it. All right, but we will do. Okay, we will do. So you can see sometimes some of the ridiculous, the way I take a trade in a ridiculous fashion, and you say, George, I can't believe that you took that trade. Oh, George, I don't believe that you have 2 or 3 losing trade in a row. But you see it, and when it's happening to you, you understand it, all right? And sometimes you will see how I pull myself out of the mess, and you say, all right. So when I have a losing trade, I can pull myself out of it. Okay, or you may learn something about where I'm placing my store. Like yesterday, I used exactly 30 pips for every trade, didn't I? Every trade I used 30 pips. Day before, I was not doing the same thing. I used 20 pips, I used 25 pips, then I used 30 pips. And then you see that also. So for some day traders, that will be something that they may think of and see, all right, okay, I can do that, or I can do better than that. I can improve in that area, and so on and so on. That's what we are doing here. So that's the whole point of it. All right? But I understand some traders do not like this type of video. Why? Because it's too long. So you work from 9 to 5, you come home, you want to watch, okay, our videos, and here it is, 1 hour, 15 minutes. People are not interested in that, okay? But you can decide to watch it and say, I'm watching 15 minutes of that, and then you know where you stop, and then the next day, you can pick it up from there. I'm telling you the truth. I watch videos in 1 week when I'm watching it bit by bit because I do not have enough time. So I know where I stopped before, so I come back on YouTube and I move it back to where I stopped before because I have now a bit of time, and then I watch it. And by the time you know, I watch the whole length of the video because I am interested in that topic. All right. So that's me. All right. Okay. Now, where are we now? Are they going to fill this order today? So another thing I want to mention to traders, because when you are doing speculative area workout, you want to go a little bit in the mind of traders. And you can use the daily chart to do that, okay? So this is something that can help you because something has happened this week that is putting a lot of market participants worrying a bit, all right? Now, you have to remember that if I bring on now the S&P 500, you trade the S&P 500, okay. For a trader, I think it was Bill Topper that did ask me, was telling me that, do we have a flat correction, all right? So now, this is the S&P 500 on the daily chart, okay? So on the daily chart, all right, the S&P 500 look like a flat correction, yes or no? You see, they say 1, 2, 3, 1, 2, 3, George. Now it went a little bit above, okay, this high here, George. I think we are going to have a flat correction. Do you remember that video that I posted? I said to traders prior to bullish signal above, was it this level? And prior to bearish signal below it. That's what I said to traders. That I said to traders because we're expecting the 5th wave, and I said to traders to apply the Fibonacci extension to the 5th minor wave or the 3rd wave and highlight the 138.2% Fibonacci extension level. That the only time that we will start thinking of a flat correction during the 4th wave or whatever it is, all right, at least we want it to come near that 138.2% level, because at this junction, personally, those are the words I use. That personally, I think there is one more bullish move before the S&P 500 going down. But that's me. But other traders, like the trader that was asking me the question, they saw this. What's going through their mind? They want to sell as a flat correction. I can assure you that there will be very experienced area wave traders out there that are recommending that this is a flat correction, that people should sell 1, 2, 3, 4, 5. I'm not saying that the price cannot print at this junction the C minor wave of the flat correction on the daily chart. So they will say A, B, whatever they call it, and they will call this one C minor wave or the flat correction. That's the expectation. I'm not saying that the price cannot do it. But Am I interested in that? No. Okay. If the price is printing their seaman away, could I sell together with them? I may decide to sell with them if I wanted to. Yes or no? I'm aware of what they are thinking. I'm aware that some traders are expecting a seaman away here. I'm aware of it. Okay, I'm aware of it. All right. But what I say to traders in that video is I draw, okay, you see a triangle that we have here, and we extended those green lines. I told traders that the Dow Jones, or was it the S&P 500, has a high chance to consolidate between those three thick green lines. Is here, it hit it here, it come back a little bit below, now it hit it there, now it's here. So it's when it came down here for the first time, you see on the hourly, on the daily chart, they bounce it to the median line between those two green lines. Right? That's the median line somewhere. Was it that? So they bounce it there and they bring it here. So it's still here. It's still so on the 4-hour time frame, we see that the consolidation, we are at near the base, and also we are now. This is S&P 500, by the way. So it's not touching it here. Will it bounce up again? So it can consolidate, go blah 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 when people are expecting a flat correction, and it may not happen. But at this junction, looking at this chart on the daily chart, this is what people are thinking: a flat correction. It can print a flat correction. While if it prints it, we'll come back again and see the damage or the changes that have occurred. Okay, so we take into consideration, and then we are again flowing with the price. Are you getting it now? Okay, so I'm talking about the mood of the market, isn't it? So I'm going to go now. So you see on a daily chart, this is about somebody looking at a particular time frame and analyzing the price action and interpreting it in a one way or another and making decision accordingly. You understand? So when you are using the speculative area weight count, try to play that game also. Try to go into the mind of other traders. It's nothing, okay? You don't need any special skill to do that. You just need to put yourself in the place of those people. That's it. That's how you're going to start going. If I say to you, can you go in my mind? Okay, so I'm posting video, okay, and I post video of 5 minutes, 50 minutes, 1 hour. Now, if you put yourself in my mind, in my place, which means if I say put yourself in my mind, it means that put yourself in my place. All right. So you'll be thinking like a YouTube creator. A YouTube creator do care about the channel, and there are rules that we must follow as a YouTuber. Okay. So if you are putting too many videos too fast on your channel, Google algorithm does not like that. Okay. If the retention, how long people stay and watch one video, is becoming useless, is degrading your channel. So now, if you put yourself in my place, you understand that I couldn't afford to post only short form video. Then I have to have some time video that are a bit longer and so on to have the retention time longer. You see, so did you get a message? All right. So when I'm saying to you to go into the mind of other traders, it means that just take their position. Think like somebody who is seeing it like they are seeing it. They are seeing it like a flat correction. Or you look at it and you say, oh, in my view, the trend is still in place, all right? And it's just a consolidation between the green line. Now, as try and say, okay, how would another trader see it? You see, then I go into their mind. So I say, okay, I look at this and I say, okay, it looks a little bit like a flat correction. Like I said to you last time, though it looks like a flat correction, I also mentioned last time that we have an inverted head and shoulder chart pattern. You see, this is the head right here. This is the left-hand side shoulder. This is the right-hand side shoulder. But the market at this junction is divided. There is one group of market participants that want the market to crash because they think that it has been going on for too long, and they want a bearish season. Okay, now there's another group that is very bullish. They want it to go out forever, and there is another group that are Elliott wave traders that are counting wave like us. So we are expecting a fifth wave. But one thing I want to say before we move back. Oh, okay, hold on, please. Let's go back to our one thing I want to say to you is this, okay? I want to ask you a question, all right? Have you ever heard, it's a very important question, all right, it will tease you a bit. Have you ever heard about, so this order is still not yet filled, okay? So I'm now watching the Dow Jones on my 3 minute time frame. Okay, let's go back to the S&P 500 as we are talking, okay? Have you ever heard about Elliott wave failure? Did I hear yes? Okay, I hear yes. Because I can read your mind from behind the screen. Did you believe that? No, I'm kidding, all right? I hear yes. Okay, you know what is a flag correction? You have been following us for some time. You know what is a flag correction. In fact, there is a web page at www.24elliottwaves.com about Elliott wave failure. The Elliott wave failure, this is a very important point, will occur when the fifth wave, okay, failed to go above or equal, it failed to go above the high of the third wave. So instead of having a normal fifth wave that goes nicely above the third wave, when we're going to have the Elliott wave failure, what we call also truncation. Am I using difficult word? Yes, you can Google that. Truncation. Okay, Truncation. Truncation. All right. So the Elliott wave failure or truncation will occur when the fifth wave fails to go above the high of the third wave. So this is the high of our supposed to be the third wave, which has been subdivided into 5 minor waves. Okay, you remember that. So we were expecting another fourth wave, and I told you that I'm not happy about this as a fourth wave. That's why we had that question mark right there. In my mind, I'm still thinking that hopefully we'll have a proper clean cut fourth wave. But if, for instance, it happened to be that this is the real McCoy or the real fourth wave, the real McCoy, the real fourth wave, and we are stuck here, okay? Can we start thinking, it's a question, can we start thinking of Elliott wave failure or truncation when the fifth wave failed to go above the third wave? It's just a question. I'll leave it as a question. So by asking that question, what you should deduct from that is that there are traders out there that are thinking of Elliott wave failure or truncation, calling for the market to pull back. I'm not one of those traders. I'm not. It doesn't mean that we should disregard those traders, because every day they come in, all they are seeing is a truncation. They want to sell. When we are waiting patiently for our clinker orderly fifth wave. So why am I saying all this? All right, did you ask that question? Good. I'm saying all those things. Oh, where are we? Now, this is S&P 500, so that's not the green line. Okay, let's go back to the Dow Jones. The reason why I'm going through all this is that whenever we are applying the Elliott wave in a speculative fashion, we need to play the mind game. So now you get a message. Good. Now going back, and I said to you, we can use the daily chart, especially. So because you're going to scalp trade for a day trader and a scalper, generally speaking, in theory, their long-term trend is daily chart. Though we can use the yearly chart, monthly chart, quarterly chart for day trading purposes. But in theory, generally speaking, one day in the life of a day trader, that's a very long time. Because they are staying in a trade for 10 minutes, 30 minutes, 1 hour. So 24 hours for a day trader is a long time. So to play that game, because you are using the Elliott wave to mess around, all right, but you know what you are doing, all right, you want to check carefully. Try to. You will get there. You're not going to. It's not something that somebody will teach you. You're going to develop that yourself. Okay. So all you have to do, like here, I'll give you one example. What has happened this week? So a week has started. That's why you could take into consideration the beginning of the week. So what is Monday now? Was Monday the 8th? Okay, hold on. Okay. So yeah, Monday was the 12th, yes or no? All right, Monday was the 12th, and today is the 15th. Okay. Am I on a daily chart? Yes, I'm on. Yeah. This could not be the 8th. No, this is the 9th, the 10th. What's going on here? Okay, because of the weekend. You get a message? You get it now because of the weekend. Okay, that's why I'm wondering where is it. Here it is because of the weekend. Okay, all right. So this is the beginning of the week. Okay, you see now. So this is the beginning of the week. All right. So on Monday the market went down, very bearish. Okay, very bearish. All right. So if you look, for instance, I mean, if you were on a 3-minute time frame, it was surprising to everybody how the price gapped down, blah, 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 and then it went down the whole day. Big surprise because you can see that last week was going up nicely. And we hit the top that resisted on the 4-hour time frame I'm talking to you about, the consolidation. And we were, okay, and we were expecting it to break above it nicely and then retest it. And Monday, boom, down. So people wondering what's going on, where this is coming from. All right. So probably those are we can blame the candlestick pattern traders. So they see that they say went up like this day, they say, oh, that's a weakness. It opened, it went up, but it closed bearishly. It went down all the way here, but it closed bearishly. So maybe candlestick pattern traders decided to place a trade just because before the market is closed on Friday, something like 2 minutes before. So that's 8:58, just 2 minutes left before the market will close. Some of those swing traders, position traders, may place a trade and leave it there and see what will happen. Come Monday, the price gap down and blah, blah, blah. The rest is bearish, okay? The following day, because Monday was very bearish, okay? People thought, oh, okay, wow, this is what George was saying, that it's better to enter swing trade on Tuesday instead of Monday. Because like the first area way, we want Monday to show us where the price is likely to go this week. So Monday was bearish. So it registered in our mind that this week can be bearish in theory. But Tuesday, bullish trader came and they push you really out. This is a bullish engulfment, unless you learn your bullish engulfment somewhere else. A real proper bullish engulfment. Okay, so we say, oh, what's all this is about? So it's just a pullback. Now the bulls are taking over, but you have to see that this candlestick bar on Tuesday got a little bit of shadow here, a little bit of shadow there, because on Monday, this is what I was saying to traders on Tuesday, okay? So on Wednesday, when I was recording the video, I was explaining to traders that on Tuesday, instead of allowing the price, so here it is, so price went up, they push it, the bullish traders were quite aggressive, they push it all the way to the top. Nothing wrong with that. What they could have done, we were expecting a pullback somewhere here, which I described with traders before, but the bullish trader did not allow the price to pull back at all. Can we see that now, Tuesday? So Tuesday, that's the 12th, 13th, that's a Tuesday here. So we were expecting a pullback to this zone somewhere here. They did not allow it. So they finished the market up there. By doing so, they cook themselves, you see. They bring the price to the top of the consolidation. And also the candlestick pattern that we see, I show you now on the daily chart, was not helping. And the next day, what do we see? Is they sold it down. If them are that's my personal view, that's my own interpretation of what has happened here. Because if they allow it to pull back or close somewhere here, maybe the market will not have gapped down the following day, which is Wednesday. They say, no, we are tired of those bearish traders who control the market the whole Monday. Today is our day. and we are not giving them any room, and they bring it to the resistance zone. Now Wednesday, bearish traders say, well, thank you so much for putting it at the right place for us. Like we said, we sold it, we are the one that sold it here, we will sell it again. And they did. Boom, down again. Yeah, that's why we are here now. So that's why we are there now. So the whole point of this exercise of going to the mind of other trader is to come on a daily chart interpret. So Monday was bearish, bullish was bearish, was bullish. Tuesday was very, very bullish, all right? And then Wednesday is now very bearish. So with those 3 days, what's going to the mind of most traders now? Most traders that were bullish this particular day, they will say, be careful if you are buying this Dow Jones. Can you believe that? Because they control it on Tuesday, thinking that they took over the bear, but the bearish trader came back and pushed them back down. So would you expect them to be very aggressive today? No, they wouldn't. If you disagree, let me know in the comment section. They won't, because they were cooked. A lot of people, I mean, if you open a swing trend that Tuesday, and now it gap down, and not only that, it continued to roll it down the whole day like this. So a lot of bullish traders were taken out of their trend here. And it's a big surprise for who? The bullish traders, not the bearish traders. The bearish traders are on the winning side. So the sentiment is bearish. Talking about analyzing each candlestick bar from Monday to today. All right. So it's sentiment right now is bearish because of the reaction here. Okay. The euphoria of the bullish trader were extinguished as the price reaches that top. That's why I'm going back all the time to that 4-hour time frame, and here it is. That's resistance there, okay, and that's the Tuesday, okay. You want to push it and leave it there, and instead of allowing it to come a little bit here, they could have survived. Probably they could have survived because if the bullish trader can push it back up, okay, you give the bearish trader more fight, but they did not allow it. They leave it in the resistance zone. That's not the best place to leave the price. Okay, you see, they made a mistake a bit though, because you will see sometimes, which I said to trader before. Do you remember that? If the price going up, okay, we know the Fibonacci breakout zone. All right. Now, if the price is coming near 138.2% level, all right, which is a very important resistance level in an uptrend, after breaking above the prior high, all right. If the bullish trader want to discourage the bearish trader, what do? They move the price purposely to cross that 138.2% level and close above it, well above it, to discourage the bearish traders. But suppose if they just bring the price and close it nicely on the edge of 138.2% level, what's that? It's a bearish invitation. The bearish trader will say, thank you very much for leaving it there. Because a bearish trader that is watching the price and want to look to sell, it knows about 138.2% level in an uptrend. So price approaching that level, say, I hope they don't bring it too far away. So and they see it closing there. They say, well, it's closing there. So you have to understand what's going on. 10 minutes before the market is closed, all right, there is a lot of investigation going on in the market. People will try to see what's going on. Where is the price closing? The market is at which level is it closing today? So people are watching it. That's why some days you come in, the price gap up, the price gap down, because of those last minutes, trading activity. Okay, am I talking too much? All right. So are we going to have it today? So far, this is what we see now. So are we going to have our third wave? Right. So like the other trader was telling me, say, okay, George, I disagree with you. And I said, that's fine. Okay, it's normal. Okay, but I stick to my wave. Can I leave it like this? It doesn't mean that trader is wrong. It doesn't mean that I'm wrong also. So for that trader, the KE is calling this, the A manual wave of the flag correction. And this is B manual wave. Let's see, what I'm going to do now. Let's play with that a little bit. I'm going to apply Fibonacci hold on, please. Yeah, to his, where am I? Okay, that's mine. Okay, his fifth wave. So his fifth wave is here. That's why he's calling his fifth wave. That's his fifth wave, not mine. Okay, all right. So I wonder where he's calling his. So if he's calling this point here the starting point of his fifth wave, I hope so, because I want to apply. So I'm going to speculate a bit. So I'm thinking first that his fifth wave is starting from here. Hold on, please don't start banging the table if you disagree. I'm going to do another thing later on. Stay put, please. So first scenario, if he called this the starting point of his fifth wave, all right, so we will apply Fibonacci extension. Did I say if? Yes, I did. Apply Fibonacci extension to that section if that is his fifth wave. So if that is his fifth wave, you can see here the price stop exactly at 138.2% Fibonacci extension level of that supposed to be the fifth wave. Okay. So now he is calling this, he will be calling this one. I'm going to his mind. You'll be calling this one the B wave. And then you respect calling this one his C wave. Is that enough for his C wave? Normally it should be 1, 2, 3, 4, 5, not only 1, 2, 3. Okay, we call it because it's a speculative area we call, okay? And then he will be, so for him, all right, for him, his second wave of a higher degree will be starting here. And then he will be looking for an opportunity to sell at the start of that speculative third wave of a higher degree that may not happen or happen because it's a speculative area we count. One should not stack on one time frame alone. So that trader may make correct decision. Okay, so probably he's selling now. Why? Because he's using the commercial trader. Okay. All right. Now, what is the difference? So for us, his wave count in comparison to mine is that we will be doing almost the same thing. So if he's selling here, I will be selling if I'm expecting that third wave of a higher degree. So he's selling, calling this B wave, we are calling it a portion or the start of the third wave of a higher degree. We see this bounce out, we may say, all right, this is maybe a second mono wave or that third wave, and we are now expecting the third mono wave of that's supposed to be a highly speculative third wave of a higher degree, which may not happen at all. Okay, so we are doing almost the same thing. Okay, that's it. We will be doing almost the same thing now. Okay, that's it. But like I told you before, okay, the speculative area we count is for is to use the area wave to make excellent buy and sell decisions. That's it. But we are not adhering to every rules of the area wave. We are messing around a little bit with this when we decided to adopt the mindset of a speculative area wave trader. So we can adopt the mindset of the PRS area wave trader, okay, which means we are going by the book, which we can do. We can go from the 3-minute time frame, 15-minute time frame, 4-hour time frame, weekly chart, quarterly chart, and then we move on to the higher time frame. We can go do that, or we can do the opposite: quarterly chart, weekly chart, 4-hour time frame, all right, 50-minute time frame, and a 3-minute time frame. We can do that also. That is about validation of wave count using different degree of wave count. They all aligning nicely. All right. Now, in that case, we are adopting the mindset of what? A PRS area wave trader. But we can decide, if we know about the area we rule, to adopt the mindset of a speculative area way trader. Somebody who learned about area way and came out and said, well, I tell you what I will do with this area way. It's a little bit too complicated for me. I don't want to go into all this nitty gritty of area way. All I will do, I will just come 1, 2, 3, 4, 5, 1, 2, 3, and play around with that and see what will happen. Or I will build a trading software or a trading robot that is doing just that. All right. So, and to make a decision, and the person may decide to test that. It's happening. Or in reality, it's happening because I see activity. When you're looking at the price, you can see that is happening all the time. Okay. And that person may decide to use the area way in that fashion. He or she knows what he or she is doing. That's that person's decision. So there's nothing we can do with that. Okay. 45 minutes, George. You are talking a bit too much. All right. This is Elliott wave trader hanging around. Okay, talking. All right. In my case, is to boost my immune system. All right. Okay, so now, so what's happening here? So what's happening here? Let's go back. I'm going to bring everything back to where I left my wave count. Okay. I'll leave my C there and I stop there because of what I've seen on the 4-hour time frame. I don't want to violate, okay, the market principle of different time frame, okay, trading. The higher time frame commands the lower time frame, and the market pattern precedes every trading strategy. The market pattern will determine the appropriate strategy that we must deploy. This is what I was also discussing with that trader yesterday. I was telling him that if you want to become a better area weight trader, don't be the purest area weight trader. Okay. Which means you want to pay attention to the price action. You want to pay attention to other trading strategies that people are using. Okay. So the number one trading mistake, whether you are using TSTWSY008, TSTW24, or you have purchased the most expensive, ridiculous, okay, trading robot that costs you $3,000, all right? Now, this is to make fun of people a little bit, but not to insult them, all right? Make fun of them a little bit, that's all, okay? Okay. If you are violating the market pattern all the time, all right, you can go round, and at the end you may feel really, really dizzy, and you don't want that. Okay, you don't want that. So there are, as a trader that have been following me for years knows that I say that all the time. I want to speak to new traders that are very new to us. We have a 3 market pattern: the rising channel, a declining channel, and a horizontal channel. When we are talking about the horizontal channel, we are talking about also about triangles. Any triangle, any corrective wave. All right, this is it. All right. So, if for instance, like I was telling you now, if you are now on the 3-minute time frame speculative using the area wave, and you forget about the market pattern and also the relationship between one time frame and another time frame, you can come here now and you'll be selling like a donkey, selling, like I say, 12 wave, blah, 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 but it's a speculative. And not only that, you are stuck on the 3-minute time frame. You are like using VPN, all right? You know that VPN? You are on the web, you have your own tunnel, your security tunnel only. But that's not it. You want to see the bigger picture. It's like you are driving and you want to know the map. You are using a navigation tool that is telling you, oh, after 100 yards, turn left. You know those funny voice, okay? And then some of them will tell you, as you approach, you say, turn left, turn left, turn left, turn left, because you're approaching now, okay? So the same thing. So, do you find it funny? Okay, I try to make you laugh because the video is too long. I don't want to be serious about everything from the beginning to the end, all right? So to make it a little bit interesting, I hope you find it interesting. Otherwise, you can say, George, your jokes are funny. Not funny, but they are not proper jokes because I know. I wonder where you learn to make those jokes. All right, so okay, let's continue. All right, so the point I'm making, all right, is that as we are playing with the EDOA rules on a lower time frame, it's very, very important that we have a kind of navigation tool that can help us to know where we are and what is likely to happen next. Otherwise, we can just hit a wall or something like this, which is not good. That's it. Should we pause the video? All right. Okay, all right. I'm going to leave this one here. What I'm going to do so that I don't forget that this is not my second wave. Okay, all right. In fact, I'll move it to my second wave. My supposed to be speculative second wave right there on the 3-minute time frame. All right. So another point I want to highlight to traders is this. You see, a consolidation is taking place. All right. So the price going from here, where now it came down like this, and it may go like this or continue to go down more. All right. Now, though on the you see this move here, this move is just a portion of the consolidation. But somebody, for instance, that is using speculative area weight count on the 50-minute time frame may see 5 waves. 1, 2, 3, 4, 5. You see? So because the price goes from point A to point B, it's a kind of impulse wave. I'm choosing my word carefully. But it's not a proper impulse wave that is a portion of a trend, because impulse wave is a section of a trend. Though it has the structure or the characteristic of an impulse wave, it's not a segment of a trend. But on a 50-minute time frame, as you are doing your speculative area weight count, you see a clean card. You say 1, 2, 3, 4, 5. You say, wow, that's exactly what I just said. And then you see a flat correction probably here. You say, yes, that's it. And you sell. And then the trouble may start for you when you are thinking of a third wave. You see, then maybe you decide to place order here to buy. But because you don't see the bigger picture, you don't know that 1, 2, 3, 4, 5, and that flat correction is just, all right, a flash in the pan. All right, it's not a proper trend that is developing. It may be a trend until we go above this resistance here. But if you forget that, then probably you make a nice trade this day, a nice trade the second day, and the third time you want to catch your third wave. And then you start buying like a donkey all over the place. I like to use that word. Now, I'm not insulting traders, okay? If you are very, very new, or I don't take it as an offense. I just use that word very often to say that if you are not making sense, you are behaving like a donkey. I say it to myself, and okay, I hope I'm not, annoying traders. If I do, let me know in the comment section so I'll cut it down a bit, but I don't think I'll stop saying that. Instead of saying stupid, I will say donkey. All right. So then you start buying here. All right, and then it doesn't go up. All right, which is not good. All right, and again, this price move from here to here. You may see, for instance, on the 50-minute time frame. All right, 1, 2, 3, 4, 5. So what is happening is So this move on the 50-minute time frame may be 1, 2, 3, 4, 5, and you say, wow. So I don't want to, because I'm using the very lower time frame, I don't want to go to the 50-minute time frame today because of the title that I'm going to give to this video. I'm avoiding to go to the 3-minute time frame. I can go to the 1-minute time frame, 3-minute time frame, and then 4-hour time frame. That's what I'm doing now. But you can investigate and see what can happen here. But it may lose like a trend. But that's why when we count 1, 2, 3, 4, 5, as we did now on the 3-minute time frame, all right, we call it one of a higher degree. Okay, one impulse wave of a higher degree. Now, the mistake that a lot of traders make, so they do that, they will do that, and they say, okay, A, B, C, flat correction, they say second. And they will do it again here, they say, okay, second wave of a higher degree. Now they say third wave of a higher degree. But before, because you are on one particular time frame, so what I will recommend to trade, anytime you are expecting another impulse wave on a lower time frame, check the higher time frame. So for a trader that is using a speculative Elliott wave count on the 15-minute time frame, we counted 1, 2, 3, 4, 5. Okay, now you see the correction. You say, okay, that was an impulse wave. That was a multi-wave on a 50-minute time frame. Now you see a corrective wave, flat correction, zigzag, double zigzag on a 50-minute time frame. You say, wow. Now you are expecting the third wave. The third wave is an impulse wave. So my recommendation is that when you are using a speculative Elliott wave count and you are expecting a new impulse wave on that lower time frame, it is time for you to check the higher time frame so that you do not get cooked. All right, this is it. So this is it. So somebody on the 50 meters say 1, 2, 3, 4, 5, and they say, oh, I have a zigzag pattern. That's exactly what I just said. And now he or she is expecting the third of a higher degree on the 3-minute time frame. Anytime you're expecting another higher degree wave count after counting 1, 2, 3, 4, 5 and a correction, it's time for you to check the higher time frame, the corresponding higher time frame. That will save you all kind of trouble. That's what I'm saying. So that's why at this point today, as we have seen it, you see yesterday, day before yesterday, we say 1, 2, 3, 4, 5, flat correction. Time for you to go to the higher time frame. All right? You are at a resistance. So you will know that, oh, all right, be careful. I'll prefer to buy here. It didn't go even there at all. This day it got down. Okay, following day you go again. 1, 2, 3, 4, 5. Today, all right, where are we? You say, all right, flat correction, A, B, C. I'm expecting a higher degree wake up on the 3-minute time frame. Well, it's time to check the higher time frame. So you go to 50-minute time frame and also a 4-hour time frame to investigate. Now you come on the 4-hour time frame and you say, oh, thank you so much, George, for telling me this. Oh, it's a consolidation on the 4-hour time frame. Well, if I want to sell it, I'll prefer to sell below this low. I want to see a clean cut sell. If I'm selling it in this zone with all this tail, I need to be very careful. Or I may decide not to sell at all and let other people to sell it. You see? Am I making sense? You get the message. You get it. Yes, I can see your face. You get it. Okay, very good. All right. So I've been waiting, as you can see here, I've been waiting for almost 1 hour for the Dow Jones to come and fill this order. It didn't. It's still there. I'll leave it there for now, okay? I'll leave it there. And what we will do now, I'll pause the video to avoid that the video is very, very long because it's already long. 58 minutes. All right. So it's already long. So we don't want it to be very, very long or too long. You say, Joe, you have to edit the video and cut it down. I do not have time for that. After sitting here, babysitting this for 1 hour, I'll spend another hour. No, I have other things to do, okay? We leave it raw for traders. Okay. All right. So, with your permission, okay, we're going to pause it now. So, if I see something interesting or something interesting is about to happen, meaning that what I meant by interesting, meaning that it's coming to fill it and I'm about to enter the trade, hopefully I'll be watching the screen that time before it crosses that level. Or maybe it's not going to happen. It may come down or stay here the whole day. There is a high chance that today the market stay here the whole day. There's a high chance. Why? Because of Monday, Tuesday, and Wednesday. Monday, it was bearish. Tuesday was very, very bullish. And Wednesday was very, 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 very bearish. And now people wondering where are we going next. All right, the bullish traders are very, very scared today. You can see that they are now rushing to them, and they are wondering what the bearish trader will do to them next time they try to mess around with them. So that could create a balanced market today, and we may not see too much movement, but we will see. The time in London is 16 minutes past 6 p.m. on the 15th of August. Recording, live recording. Okay. Though I am a little bit sick, all right? Talking to you like this, the voice does not reveal, okay, what people are going through. The voice may sound strong, but this is it, okay? So pausing the video after 1 hour recording. Was it 1 hour or 2 hours? I think today I'll push it to 10 hours. Now, no one is smiling, so I won't do that, okay? I won't do that. I'm kidding, okay? So that's 1 hour, okay, 43 seconds. Pausing the video for the first time, of course, with your permission. Speak to you soon. Okay, traders, you can see that we paused the video here. The price went up a bit, but here we are crashing down. A very, very fast, all right? So we will see what's going to happen. Just to show you, because it's becoming a little bit interesting now. You see how it ran fast down. Okay, now one must watch this level here. Okay, at 138.2% Fibonacci extension level, or that's supposed to be the fifth wave of the other trader that I was talking about before. Now, I was saying to you, if that trader decided to call this the fifth wave, that 138.2% will be here. Now, what I need to say to you now, suppose if, all right, if, all right, he called it this one instead from here to here, his fifth wave, all right, instead of from here all the way down here, if he called this one his fifth wave, all right, meaning that his fourth wave is here. Am I correct? 1, 2, 3, okay, 4. Oh, I don't want to mess up my chart. Okay, if you call this his fifth wave, all right, the 138.2% is further down below the first 138.2%. Also, you need to go down more. Do you get a message? If he's calling this his fifth wave, the 138.2% will be somewhere down here, very down here. Okay. I'm going to try to go to the hourly time frame and see whether we can see that new 138. Can you see 138? It's not the one. This is a different one here. Okay. I don't want to remove this line because I'm now on the hourly time frame. You want to stay focused. It's not that one because it's already crossed it. It's not that one. There's another one further down here. Okay, 138.2%. Fibonacci extension level of that supposed to be, okay, this section here supposed to be the fifth wave. It's somewhere down here. I'll leave it here. If it's going down more, we will see it soon. All right, so as the price going down, you can do that and to determine the possible reverse support. Now, without messing up my own wave count, oops. Okay, 1, 2, 3, 4, 5, A, B, C, that's mine. I leave it there. So you can see that in this case, somebody that is still flowing with you will say, first minor wave of the third wave, second minor wave of the third wave, and this is the third minor wave of the third wave. Really go beyond the 161.8%. This is very important before you can call this one here the third minor wave of this supposed to be the first minor wave of the third wave. This price action here must go, or from here, must go beyond the 161.8% Fibonacci extension level of this price move. Will it do that? So it's going down now. So for the other trader, so that the other trader may say, okay, now this is the end of his C wave. So for the other trader, he's saying, this is the end of my C wave. And we're doing almost the same thing. So we'll be saying, this is the end of our second wave, second manual wave of the third wave. He's selling, we are selling. But I'm not selling now, okay? I'm not selling now. And I explained it to you already. So it's not crashing down. Yesterday, I was also, you don't want to forget that. That's why I want to go back to it in a minute. So you can see what is happening. The month of August is very bearish, and there is a target. This is what I was showing you yesterday. I'm not going to repeat again. I'm just going to touch upon it. That pitchfork tool that we placed on our chart somewhere in 2010, 2011. Okay, that's where the position traders, those that are creating that long bearish August candlestick bar, they will be watching that level. Recently, you can see it came near that level. It crashed, we come back here. So there is a support in that zone. So if the price, this is what we are saying to traders. I was talking about it recently. I'll say the last lap or the last segment of a pattern or the fifth wave, all right? Or the C manual wave of ABC corrective wave. Any last lap, last segment, last portion of a specific pattern, usually the momentum is very fast. It's also true, yeah, you want to understand it, this is what's happening here. As the price is approaching where they want to bring it, all right, it can be faster. So don't think of it only about the last segment or the last portion of a pattern. If a financial instrument, okay, I think I mentioned one time, is going to a specific target, there's a midpoint target and an ultimate target. So as it's approaching this is contrary to what we do normally. When you are driving, you are approaching your final stop, you slow down, isn't it? But in the market, it's different. So as they know that, because people are watching, they say, people are asking the correct question. They say, where is it going? It's going here. I say, we are approaching. So sometimes other traders that are not aware of it, they will try to slow it down here. They will try to slow it down. And they will say, no. Those that are controlling, they say, you have to bring it fast there, or we are not going to get there. If we slow down, we may not get there. Which means, as the price approaching the ultimate target, it may also run fast. But in a medium term, this is about the monthly chart. So we're talking monthly chart, we're talking about 4-hour time frame. Because I'm scalping, I'm giving priority, though I know that when we have a bearish monthly candlestick bar, if one is buying, is a contra trade. Or we have a bullish monthly candlestick bar and one is selling, is a contra trade. One can sell or buy, but one should be very careful. Yes, sir. So I'm looking at I'm concentrating on this consolidation on the forward of it. As I was telling you earlier on, you see, now we are below, you see, we are below that the low of this candlestick bar, as I mentioned to you now we are below it. All right, it breaks below that level at the 25450, let's call it like that. Hopefully that zone, all right, here it is. Now it breaks below it, really going to retest in the final resistance. And I said to you that I don't want to be part of it because people were selling too low. I don't want to be the last person to sell it. But if it breaks below that level and retest the final resistance, there will be some people selling it again more, which means we can have another bearish day. Meaning also that my intention to look for a bullish trade right there is becoming like a wild dream. All right, we will see. Okay, but I'm monitoring. So where is that 161.8% we are looking for? You remember this price move? Was it about? All right, is that it? It's just there. Yeah, that's it. That's the one. Well, I think it's further down. Well. Hold on, please. Bear with me, please. Yeah, that's the one. That's the one. That's the one to 8.2. It crossed through it long time. Now it crossed even. This is it. So for this last price section here, you see now. You see this. So the price did cross that 138.2% that I thought is somewhere down here. It's not there. This one, I thought it was another one. That's the one. Cross it. Now, so we say to traders, the 161.8% Fibonacci extension level is a breakout zone. See, you just break through it. It's break through it, breakout zone. It may continue from fast. That's why we see this now. So what I'm going to do now, because of this 161.8% is in fact the line here, is a breakout zone. What I'm going to do, because my intention to buy it here is too far away, I'm going to bring it a little bit. I'm going to play this mind game around that 161.8% Fibonacci extension level of this move down. So you may say, George, that's crazy, because the reason why you are saying it's crazy is because I'm not willing to buy today because I was not part of the bearish traders at the early stage. I don't want to be the last person selling it, you see. So I don't want to come in too late and then they mess me up or they play me as a football. That's what I'm saying. That's why I don't want to be part of it. But if you consider our wake up of yesterday and you say that today is a continuation, George, it's a continuation. First wave, second wave, third wave, fourth wave, fifth wave, A, B, C, flat correction is finished. Now we are now in the third wave of a higher degree. So those traders will say first minor wave of the third wave, second minor wave of the third wave, and we are now the third minor wave or the third wave, provided that we go beyond the 161.8% Fibonacci extension level or this one here. So I'm going to move this Fibonacci extension now and I'm going to apply it to our supposed to be speculative first minor wave of that supposed to be third minor wave of a higher degree. So you see now, so apply it now. So our 161.8% is somewhere down here. It's not a mistake. I don't make any mistake anymore. This is correct. Before I make a small mistake, but it's definitely somewhere down here. So I'm applying the Fibonacci extension to our supposed to be the first minor wave of the third wave of a higher degree. And before we can call this move that is continuing now as a fully fledged third wave of third minor wave of the third wave of a higher degree, it must go at least beyond the 161.8% Fibonacci extension level of the first minor wave. We will see. All right. And also, if we do not have any other idiot wave violation, of course. Okay. So it didn't reach that level here. But I'll explain to you already. There was 161.8% Fibonacci extension level of which one? Of this move. That's why I place that limit order there. Don't get confused because we are using Fibonacci retracement at different places. Now we are talking about this one, and we are talking about another 161.8%, which is somewhere down here. All right. So I'm watching it now. So it's a speculative area we come, and there are trading software doing this. There are human beings doing that. It's just a pure speculation. So one more thing that you need to understand, I'm going to go back to something that I often do using Fibonacci tool. I'm back on my 4-hour time frame of the Dow Jones Index. We were talking about this tail. This is the tail that is bothering me a bit, all right? This is the tail, this zone. Now, the bearish they are taking over. They are putting bearish candlestick by that zone, which means we have lost that support here. Okay, so one thing that you can do, which a lot of traders do not do, nothing can stop you, for instance, all right, to apply Fibonacci extension to the tail here, this tail, just the tail, because that's a support zone. Hopefully we can see all this line without messing up what I've done before. And the idea, by applying the Fibonacci, I must do it correctly. It must be correct, spot on. Just to the tail, because it's supposed to apply Fibonacci extension to that. And I want to know where is the 138.2% Fibonacci extension level of that tail. Here it is, here it is. That's where the price is now. I'm going to color it now into red so everybody can see it. That's it. And then I'm going to remove that. I do that very often because it's a support zone. Now we cross that support zone. Where is the next support level? The first challenging support level is 138.2% Fibonacci extension level of that segment of the tail, just the tail. That's it. Now I'm finished with that. I can remove it. I can delete it now. I just need to know where is that 138.2% level. So we are sitting on it, so to speak. So it's becoming, again, interesting to me. And I'll go back again. Is it too much for you? So this is what we are talking about, multi-talented trading, all right? So everything that we know, that's why I was saying to that trader, don't be the purest Elliott wave trader. Don't use the Elliott wave strategy alone. You want to remember every other strategy that you have learned before, even coming down even to the divergences, CCI, RSI, don't forget them. And you want to combine them with your wave count, and sometimes they will be very useful. As I demonstrated to traders, talking about the double zigzag pattern. Did you watch those videos about the double zigzag? We were talking about the moving average 100 and the moving average 200. Those two moving averages are very useful to those who understand the Elliott wave. So now we can combine the moving averages with our Elliott wave count. You see? You see a zigzag pattern, usually we break a little bit below, we bring the price to the moving average 100 quite often. Okay, A, B, C coming to the 100, moving average 100. Quite often, not always, quite often. Have I said quite often? See, Joe, why do you always ask that question? Okay, now, it's to make you breathe in and breathe out a bit as we continue our discussion. You see, this is what I was telling you. The Elliott wave principle that no one is talking about. You see how it comes down like water in a straight line. And this one looks a little bit, I know a lot of traders will say, Joe, this is not a triangle. In fact, a triangle, how am I going to draw this triangle today? All right, okay, we draw it like this. You see me do this very often, so they say, Joe, this is not a triangle. But what I do, you see, if the price is doing something, you see, goes like this, okay? Just three move, okay? You see, three move. Was it three? This is just two. 1, 2. Yes, it. So price came down and did this. But in fact, it's like a three move because something has to bring it up here first, which is this section here. Bring it up there and it comes down like this. When we see that, okay, we can draw a triangle. And I do that successfully, but I can't teach it to anybody. Okay, so is that a triangle? For me, it is. For other traders, it's not. And then just pop out. So let's play with that a bit. I'm just playing now. I'm playing with it. Okay, so I'm just using this as the height of that my dodgy triangle. If you accept that, so I can do what I want to do. So we project it down to see where is the next target. So let's play with that a bit, okay? And then bring it down again. And we bring it down one more time. Can we see now? It's a little bit down. So the median line will be, so ultimate target somewhere down here, where my cursor is, a little bit down, and midpoint target a little bit above that red line. So now you see it's a midpoint. But you see the price, how the price, you see the strong momentum. I was explaining this yesterday. If you manage to watch that video in full, that's what I said to you. If your grandmother, okay, that's it. All right. I want to buy the Dow Jones again. I'll buy it at a 25398. Yeah, 25398. I want to buy there. Okay, I'll leave it there. I missed that opportunity to enter earlier, so I'll leave it there. 25398. Looking for an opportunity to take that bounce up, can be very fast. And I want to be back of it. Are we going to get in nicely? Here he comes. Yes, yes, my friend. That's it. You see? Come on. That's it. I'm now in this trade. And I will use my 30 pip again today. Okay? 30 pip will be 68. It's a very good place for that stop loss. Are you getting it now? You getting it? Okay, trader say Joe, record more speculative video. So today we're going to be like it's going to go fast here. This is an Elliott principle that no one is talking about. It's something to do with the moon, and I'll be writing about it and talking about it. See how it came out of that supposed to be my favorite triangle, and it crashed down very fast like water. And this is what I say, it will bounce up. It can bounce up very fast. The good news, the reason talking about good news, what I meant by that is that what I like about this is because it's also coming near the 138.2% Fibonacci extension level of this supposed to be the first minor wave of our speculative third wave of a higher degree. So as things stand today, where we are now, for the Dow Jones, if it couldn't break below that 138.2% Fibonacci extension level of that supposed to be the first minor wave of the speculative third wave, we cannot call this one here as a proper, fully fledged third wave. But if we are adopting the mindset of a speculative trader in the proper sense of the word speculative trader, because you are playing with the Elliott rule without giving too much importance to those rules, nothing should stop you because you are adopting the speculative mindset to call this one the third wave. So you know that it's not a real third wave, but you are just playing with it because you are concentrating only on the price move. So you say, okay, 1, 2, 3, that's it. Instead of saying proper wave, that's it, it's running fast. Did I say it will run fast? So 9 a.m. we are now 40. I'm out of this trade at 48 very fast. Hold on, please, traders. Okay, at 48 pips very fast. Okay, that's it. You see, very fast. You see, this is what I'm talking about. You see, 1, 3, 2, 5, 3, 9, 8 is going to go more. Now, because of the reaction, that's what I'm talking about. The way, I don't know how I can draw this for you. It's a phenomenon. It will go very fast because of the reaction. It bounces up like water. It bounces up big time. You want to catch it, all right? Do you see now? So this is something I will be writing about at 2 for Elliott. Be ready for it. And the Elliott principle that no one is talking about. You see, so it came out of a triangle, and now the momentum very fast, right, coming up, and hit the ground, so to speak, and it'll bounce up again. Sometimes it may slow down, which is the market principle. High volatility is often followed by a low volatility and possibility of reversal. But now, this is very interesting. This is what I'm saying to traders all the time. Turn it upside down, play with it. So in normal conditions, so in a market, it's not always normal condition. All right. So in normal condition, high volatility is followed by low volatility. So we want to turn it upside down. So this is the head here. Now we turn it upside down. We say, all right, what will happen if the price, we have a high volatility, but we didn't have a low volatility and the price start turning around? You see? So we start asking more questions. So if we have a high volatility, working with market principle, in normal condition, the price should slow down before we see that we may expect, not guaranteed that we will have a reversal, that we may expect a reversal. So if the price came down very fast and we do not see a high volatility, we do not see a low volatility, a transition, so to speak, but the price just starts running away. Reversal without a transition, a reversal without a transition can be very fast. That's what we will say. So the price may copy, may duplicate the previous momentum. Don't unsubscribe yet. Stay put, please. Because did you get that? So you see sometimes when the price will do something like this, it will calm down, okay? You calm down like this, without any consolidation, any slowdown, and then you come back again here. And quite often, I'll come back to that in another video, you have a symmetrical line here dividing in like an equal angle here. So, and also, for those of you who keep your eye wide open, sometimes the price will do the opposite of the reaction that it did to come down here. So if the price did something like this, is it getting too much for you now? Okay, take a pause and come back again. That's how we're going to enjoy this video and watch my 2 hours video today. So if it did something like this coming down and it changes direction going back up, it's likely to do the opposite. So you go the other way around to go back up on this side. So we will say something like this. Sometimes you see that exactly symmetrical. You see what's going on. So what I'm expecting now is to go a little bit above this line and to give me a nice pullback so I can buy again. Though I'm talking to you, I'm watching it, okay? So we will expect something like this. Sometimes the price will do exactly that on the dot, doing the opposite of what it did here, okay, on the other side. So when we see a reversal after a high volatility without a transition, we are likely to see, okay, the same intensity of momentum that has happened in the previous leg, talking about how it came down fast. If you don't see a transition, you see a reversal, it's likely to go up like this. Now, some traders may quickly deduct. Don't deduct it very fast, my friend. Don't do that. So now you see here, this section here, it came down. That is, what do you need to do? You need to apply, now that is going up, okay, like this, you need to apply another market principle of the 50% Fibonacci retracement. Here it is. The 50% Fibonacci retracement will divide the price action into 2 zones. So I'm going to place the 50% zone is here. You need to concentrate to follow me. You see, that's there. You want to understand what's happening in the market. So you see that the price is acknowledging that resistance at the 50% of the price move from here to here. The bearish traders know that. They want to sell it back there and push it back down. They know that if it goes above that 50% level, it's in a bullish territory. So that's why I said to you, I would prefer it to go above that level and to give me a clean cut entry above that bullish zone, and then we take it up if it's going to go up more. But right now, as you can see, you see that they are stopping it there. Those are bearish traders. Am I talking too much today? That's 1 hour 27 minutes. Yes, guys. Now you're going to love YouTube, all right? Have you ever watched 2 hours video on YouTube? Have you ever watched 4 hours video on YouTube? One block of video, watch it from the beginning to the 4 hours. Have you ever watched a video on YouTube that is 5 hours? A lot of traders do not. All right, I do. So if you want to check the minimum one that I will tell, check a channel called Tinkerview. Tinkerview, Tinkerview, Vieu. Tinkerview. It's in French. Now their video usually is 2 hours or 3 hours. It's in French, and I watch them in one go. All right. There are other channels that I watch that are longer. All right. So if you think that, Joe, you are pushing a bit too far, you are not a YouTuber, all right? We should dismiss you completely. Now, this to make you laugh a bit. All right? Okay, so if you are passionate about something, you watch it, all right? Do you watch also the TED video, T-E-D, TED video, when those are long form videos, all right? So you can't expect all the time 10 minutes, or do you watch a video like a Shark Tank, 44 minutes, 1 hour, all right, and so on, all right. Those are long form, okay, video. So 1 hour, call it 1 hour, 30 minutes. So hopefully today we will bring it to 3 hours. Ah, no, I'm kidding. I'm kidding. I'm kidding. I'm thinking to record a long form video from the time New York is open until the time New York is closed. So now you understand why we see this reaction here. If you start using more and more the market principle, You see what's happening. So you see what I will explain to you now. The Fibonacci, you can't escape it. Are you a subscriber of Day Pro Traders YouTube channel? If you are not, well, you are missing out, because I know a lot of traders that are following us at 24 Elliott way are also subscribed to Day Pro Traders, because they understand that as an Elliott way trader, you must combine the Elliott way and Fibonacci by all means. So as I was talking to you now, we were talking about Fibonacci all the time. Look at this. This is what we are calling the first manual wave of that third wave, and we apply a Fibonacci extension to it, and here you stop at 138.2% Fibonacci extension level of the first wave. It's a resistance. Now, we talk also about the tail of that one on the 4-hour time frame. That's why this is the line that I show you there. All right? Okay? And so we are using Fibonacci all over the place. Now we are talking about the 50% Fibonacci retracement level, and there are people challenging the price there. And as I told you before, I'm not interested, okay, I'm not interested to sell the Dow Jones in that zone, okay? I let other people sell it. So I have one successful trade, 48 pips. Should we put it on the board? Okay. All right. So a lot of some trader may be very new watching this video and say, George, I can't believe it. It's so easy. It's not always easy, believe me. There are sweaty days when one can have 3 losing trades in a row. So that's why I'm showing you everything. So you see here, you say boom. Okay, you see it's a losing trade. You say, wow, I can't believe George can take that useless trade. Now you see, all right. And then you from there, this is the purpose of talking to you all these hours, so you understand what's going on. All right. So people are trying to sell here, and I'm not interested in that. Okay. All right. What I'm going to do now, I think I will pause the video one more time, and I'll put it there. Okay. I'll put it there. All right. And it's crossing it. So I'll hang around a bit. All right, I'm hanging around a bit and see whether they will allow me to enter it again. All right. My expectation is to go up a bit and then pull back in an orderly fashion, not doing any blah blah blah. Do it properly. Okay, and then we'll see whether we're going to bring it back here. Now, if it's going to come back here, so we will set a midpoint target somewhere in the middle here. Are you getting it now? And before this one. So I hope they will be nice and pull back. So if they're going up like this, because I'm very defensive, that's why I don't want to just place here and say fill me, and then they fill the order and then bring me down. No, I want them to calm down gently, and then we take it together up. So you can just go up, 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 up. This is what I'm saying to you. If a lot of traders suddenly spotted this phenomenon that is happening here, they may jump on it and say, it's going there, and they will push it, poo, 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 there. All right. Should we wait until the pullback, or should I pause it? Okay. With your permission, I can sense that you are saying to pause it. I can read your mind from behind the screen. Whether you are in Bangkok, Singapore, India, Texas. Now, this to make you laugh a bit, though. That's not true. So they're pushing it up here. What greedy traders, really greedy traders. Okay, if they push it up to the midpoint target, hopefully they will pull back nicely here. What I will do, because I want to buy one more time, though. If they're pushing it up like that, I will draw a common central line like this. Okay, and then hang around. So in that case, if they push it too far away and they hit this midpoint target here, my expectation is that when they hit that level, they come down gently like this to touch it here. And then if the common satellite is broken here, we all take it up one more time. Will it do that? We will see. So pausing the video with your permission, of course. After 1 hour 34 minutes, we're going to wrap it up in when we reach the 2 hours time. So the time in London is now 23 minutes past 7 p.m. All right. Speak to you soon. Pausing the video for a second time with your permission. Okay, traders, it looks to me that those traders are trying to be a little bit nice to me. I will use now market geometry under this 3-minute time frame. So this is what we are saying. Okay, you learn something, you don't want to forget it. You learn about a dynamic trend line, you learn about market geometry, you learn about smart median line, you learn about divergences. Please do not forget to apply it, even if you are using the Elliott wave theory. So I got that narrow channel. Oh, well, what are they doing? By the time I draw my channel, somebody bought it already here, about a 50% level. Wow. Well, those are people in a 1 minute time frame. All right, they are playing with the stochastic and CCI. You want me to show you? I'll show you quickly on a 1 minute time frame. You see, this is the CCI oversold. They are scalping on a 1 minute time frame. Buy, crazy. Wow. I don't know how those people trade, but it's their money. I don't trade that way. They are born again scalpers and gamblers. They are not scalping alone, but they are gambling big time, believe me. Playing with a lot of money, those people, these are not ordinary traders. Those are proper gamblers that are throwing money, 100 p per point, $100 per point, and gambling big time. Now, I'm not criticizing people because it's not my money, but I just admire them and I know what they are doing. And maybe some of them will be watching the video and say, George, that's me. And I know that, but I don't know, they must be very rich to do that. Okay. So what I've done now, see that narrow channel on my 3-minute time frame, I project it down here. And it will be nicer for this. I don't like this one. This is a bit greedy here. I want another bearish candlestick bar to come. I would prefer it to stay bearish completely without tail. All right, to come out of that channel a little bit here. All right, and the next one to be gently bullish, and then I will place another above the high of that one. Are you following me? All right, don't worry. Because if you want to buy low, isn't it? So they bring it up. So you want it's normal for it to come out of that would be healthy. All right. In fact, I can do this again here. Project the width for that channel again. Traders that are following me at Day Pro Traders clearly understand everything that I'm talking about here with a Fibonacci extension, 138.2% market geometry. But I believe there are traders out there that are purest Elliott traders who get lost sometimes when I'm doing things like this. Please join us at Day Pro Traders YouTube channel, please, okay? I can go on and on and on, so like we were here. Some traders will get confused. We start talking about dynamic trading. You see this supposed to be a first wave, okay? First minor wave of the first wave. Do you know that we can draw a dynamic trend line to this first wave here? Because the price was oscillating here. So I can draw a dynamic trend line, roughly like this, roughly like this, and extend it, you see. So sorry, because See, when above we come down, when above we come down, when above we come down, and so on, we come down, and extend that. And if the price continue to go down here, that will be another support level that I can watch. Are you getting it? Are you getting it? All right. I'm going to start cleaning a little bit my chart. So please, traders that were criticizing me that, George, your chart is so messy. Okay. So we want this one to stay bearish. Yeah? This is what I was saying to traders. Sometimes the market does not understand that a pullback is just so important. People rushing to buy. Just relax, and it's good. All right, it's good to calm down correctly, and people see all right, and see whether the bearish traders are truly serious or not. And then there are many traders waiting for that pullback, and then we want to see what will happen next. And people are just rushing to buy anyway. Why do you want to buy just in the middle of nowhere when you can just wait for it to pull back? You see here? Yeah, this is what we are talking about. It went up, come down this way, new lower low, bounce up. Yeah, it didn't form a new lower low. Yeah, it did. Bounce up. Anytime, yeah, it didn't form a new lower low. Yeah, it did. Bounce up. And then people want to bounce up and then see the reaction and then sell. It went up, pull back. Now from a new lower, a lower high, you sell below this low here. You find a resistance. You see that? Traders were playing this here, right below. That's their retest on the 3-minute time frame. One Tennessee bar, and this one, they sell it down. Believe it or not, this is what's happening here. All right. Is that enough? I'm not satisfied with this. I wanted to go a little bit more here. They are rushing a bit though. Then we know that it's like the bearish pressure has now evaporated. So how can we talk about something evaporating if the thing was not there at the first place? So you cannot talk about the evaporation of water or a drink if it was not spilled first. So that's why you want spill it and see what will happen. Will it go through it? Will it continue or will it evaporate? So price went up, people are selling, okay, they are spilling it now. Okay, let's see whether it will evaporate. If it evaporates, then we buy again. This is it. People don't want to give room to the bearish traders. This is what created this mess here on that particular day, instead of allowing it to come nicely here and finish here that day. They say, oh, that candlestick back should be bullish today. We can afford to have a bearish market. So, as I'm speaking to you now, there are traders who sold it here because the common trend line here is broken. It's come out of that channel, so there are people selling here. I don't want to be part of those traders. We are in a bullish zone right now. We're about a 50% Fibonacci retracement level. Doesn't mean that the price will definitely go up, but I am more willing. This is good now. Okay, this is good now. Yeah, it's good now. For me, that's enough. Okay, it's good now. Even if you got a tail, it's good, but it's good for me now. So this one, I don't want it to be too long. Okay, this one, I don't want it to be too long. I wanted this one to be average size. That's me. Even that's enough now. Stay like that. All right. And then if we start going up, I will gently. Did I use the word gently? Yeah, because if I say gently, it means that I'm very careful, all right? Because they can still take me out of that trade. there is a little bit of risk. And also checking the time of the day. We said this 100 time is very important. This is not the best time for scalping because we are outside the first 2 hours since New York is open or London is open. So we are now in what we call the gap period. So as a scalper, as a day trader, you want to pay attention to the time of the day. Am I aware of it? I can handle that. Can I? Okay. So when this one is closed, this candlestick bar is closed. We don't want it to be too long. I will be placing a limit order again. Hopefully it won't be too long because I don't want it to be too long. And now it's getting a bit too far now. I don't want it to be too long because that can invite the bearish traders. It's getting a bit too long now. If you can pull back a bit to this level, that will be reasonable. Because what usually happens, you see, there are scalpers. This is why, if you are scalping, you need to be aware of other scalpers. There are scalpers that are on a 1 minute time frame. Okay, I will show you again. They are the one that, if you see that, they push the price up. Okay, so they are stochastic or CCI is overbought, and they are dumping it straight away. So when you are scalping, be aware of those long candlestick bar because sometimes you see them like this, and then you say, oh, it's going up now, and you buy on top of those long candlestick bar. And those people scalping on a lower time frame than yourself are coming out, so they dump it. You see here? So it goes up like this, okay? And then quickly they dump it. So that's why I don't want it to be, okay, well, I'm on a 1 minute time frame, that's what I'm saying now. We don't want it to be too long candlestick bar. All right? It's a bit, you see, this is a bit long for me now. I don't like that. I don't like that. So I'm moving my vertical line here. Oh, no. This one is too long. Candlestick bar for me. I don't like that. Um, we are now talking 1 hour 47. I'll try my best so we wrap it up in 2 hours. So 2 hours is a long time in the life of traders. All right. So if you are watching it up to this point, I would like to say to you, thank you very much for watching the video. You are a passionate Elliott wave trader, and you can be proud of yourself. All right. All right, let me open my Bavaria Shandy. Very nice string. Can you hear the noise? All right. So for those of you that are new to Bavaria, so it's a region in Germany, or a beautiful. Have you ever been to Bavaria region? Munich. Oh, beautiful mountain. I like Munich very much. So if you visit Germany one time, go to the Bavaria region. People are friendly, and you drink a lot of beer. Okay, very nice. All right. And the Munich airport is beautiful airport. Very small but nice. They rebuild it now. Very nice airport. Beautiful. So the gates, all right, if you speak German. All right. That's all I can say now. Guten Tag, guten Morgen. So this is good. This is good. This is good. If you stay bearish, that's good. So a lot of people are thinking like myself. So that's good. So if that one stay bearish, not too long though, gently bearish, they turn it around now. That's why you have to wait for the candlestick bar to close first. I would love this one to stay bearish. How to wait more? But okay, maybe. All right. People are selling there. Orderly pullback. That's what you say. So these are the people who mess up this thing now. These people. Okay. These are the people. Instead of bringing it a little bit just there, even with a little bit of shadow, and then when the next one starts opening, becoming bullish, we'll place our order somewhere up there to get filled. So now, because I'm very defensive today, I'm not willing to take any trade anyhow today. That's why I'm waiting. Okay, so some trader may say, "Joe, you could enter the trade now." Yes, I could, but I don't want to. Okay. Or you may say, Joe, you are too defensive. Yes, today I am defensive, very defensive today. All right. So they're taking it away from me, so it's no. I don't think it's going to happen now. So I don't see a very good entry on this one. So what I'm going to do, because it's all down now, she is almost there near that midpoint that we were talking about. Roughly is there now. The pullback did happen, and this one goes above it, but it was a bit too long. So I was a bit reluctant to enter the trade. I could be in this trade now, but I wasn't. So this is it. Final destination, normally this point here. I hope you learned something for this video, and we put into use, okay, to improve your speculative Elliott wave scalping. All right. So if you have any question or suggestion, please put them in the comment section. And in due course, I will be recording another video to answer your specific question. It was not my intention that the video is a 2-hour video. It's just the discussion going on, talking about everything that one need to talk about. It's good to talk. Sometimes we do talk a bit too much, but I think the subject we discussed today, myself, I find it very interesting, and I hope that you too will find it very interesting. As I explained to traders before, some traders just like long form video. There's nothing I can do about that in this scenario, because when we are talking about live day trading, we want traders to see everything that we are doing, so they don't think that, Joe, you are hiding something or you are fabricating something, blah, blah, blah. So we keep it long form tutorial. All right. Now, if you are somebody who likes short tutorial, but you are also passionate about Elliott wave scalping or speculative Elliott wave, and you don't have enough time to watch, to sit down and watch a 2-hour video, you can break it down, all right? 50 minutes, or 20 minutes, 20 minutes. So 20 minutes times 3, that's 1 hour gone, okay? So instead of watching one go, you watch it 6 times. All you need to do is just remember where you stopped last time. And the good thing about YouTube is a powerful learning tool. You can pause the video, you can come back to it. It's something you don't understand, you can ask a question in the comment section, and so on. And after a few days, you can watch the whole video again if you want to. You see? So it's a powerful learning tool. So don't get angry if a YouTube creator create a long form video. All you need to do is say, am I interested? Okay, you receive the notification. I saw you last time. I don't usually send the email to my subscribers on my website. But I notice sometimes people, maybe in a year, or 4 or 5 times, I will send the email to my subscriber to my website. But this sometimes people, as soon as they see something, so you subscribe to a website, there is a way to unsubscribe, all right? So if you are no more interested, make a decision. Just go and unsubscribe. That's it. I'm not more interested in this topic. So just unsubscribe. End of the matter. Matter closed, all right? It's not spam. So the person sends you email, you say, all right, so I'm a subscriber to that website. That's why I'm receiving this email. Now, I'm no more interested in it. Just unsubscribe. Very simple. All right. Or you are a subscriber and you think that, okay, that's too long for me. You may decide to watch it how you feel like watching it. So the decision is yours, and no one can make that decision for you. And you can make it anytime. All right. So I was thinking to take my second trade. I'm not happy about it that I took only one trade today because I was not interested to sell, though Dow Jones I could sell it in this zone here for this session here. But I was not in a mood to sell the Dow Jones today. So I let other traders sell it, and I only get one opportunity to buy somewhere here and quickly get my 48 pip. The greedy bullish traders, instead of having another pull back nicely here for me, this candlestick bar put me off a bit too long for me. Now I wonder what they are up to here. Are we going to have a triangle? 1, 2, 3 here. Before we rush to do the last leg of it, is it going to form a triangle? So as I explained to trader earlier on, the triangle, well, that's it. This is it. See, it came like this, up, it pulled back. Okay, you see now, that's what I'm talking about. It went up again. So usually I would draw a triangle like this, and people say, George, this is not a triangle. And I say, well, thank you very much for saying that. I accept it as a triangle for my chef. All right. So like this, now you see how is here now. So let's say it came up like this, pulled back, and then went like this. So one can carefully buy above that triangle, and then we can set that target like this. You see, you measure that height like this, and then you project it up. You see, which is bringing us to the top right there. Can you see that? Should I play that? So it can bring us there. So let's see whether they're going to come out again. So the way things stand now, we wait. Let's see how this one will behave. What's going on with these people today, man? As soon as the price drop a bit, the bullish traders are rushing again. All right, what's the time now? 3 minutes left, traders. I'm a bit tempted to take one more trade a little bit up here. To take the last lap up very fast. Or should we call it a day? All right, traders, so let's call it a day. So this is it. If this video has been truly useful to you, if this video has opened your eyes, please let us know by giving us the thumbs up. If you say that, George, you were talking too much, but you were not saying anything. All right. I want to place a limit order here to buy the Dow Jones at 25529. I'm going to be very careful so that they don't pull me down because I'm about to wrap the video. So I'm placing it there and see whether they're going to be friendly to me at 25529. That's it. I'm now in this trade, which is good. And let's see whether they're going to raise it fast or not. If they slow there a bit, I'll close that trade. And 29, I will be willing to take 10 or 12 pip if they're going to squeeze me down. I won't mind taking 12 pip loss and run away. But my intention is that they keep it up. They feel me already. So I'm watching it now. I'm watching it. That's it. It's going up. It's good. I'm on it, so to speak. I'm on it, watching it carefully. Okay, because for this one, I will. I'm watching them. I'm watching them, and if it come to 25519, I will just close that trade. Okay, it's now 23. I'll watch it a bit more. 22.90. I'm out of that trade with okay 10 people loss. All right, they are not friendly today, so that's 10 people loss. Full stop. All right, so this we conclude our discussion today. All right, all in all, 38 pips. Give away 10 pips in this one. Could be better. This is about risk-reward ratio. They could continue to go up more. But there's a bit of blah, blah, blah going on here. Somebody's trading like a crab here. If I see that trader, I will slap that trader. All right? They are trading like a crab here. All right, traders, give the shout out. So if you are talking with your friend, please mention 24 Elliott wave. Also mention accurate Elliott wave forecast. All right? Did you know about the accurate Elliott wave forecast? You go to www.24elliottwaves.com. All right? Click on the web store. You will see accurate Elliott wave forecast. What I'm doing is very simple. You want me to give you accurate Elliott wave forecast for a financial instrument. All right, you pay £6.99, which is reasonable in comparison to how much people usually pay for Elliott wave forecast. You can check it on YouTube and compare it. And once we have all the details of the financial instrument that you want me to review for you, you see what I did here? All right. You see, this is what I'm saying here. You see what's happening here? They discourage me to come out of that trade because I don't want to risk another 30 pips as I'm about to wrap it up. And they will do all this blah, blah, blah. You see, instead of just doing it in another, you see, now here it is. You see, here it is. I'm not going to join them again. So they're going to run fast. This is what they are trying to do. And somebody is just messing people up here. And sometimes it's better to stay away from those kind of traders. If they are trading like a crab, and you notice that, just don't trade with those people because they will waste your money. All right, now going back to the accurate, I'm a bit upset about what's going on there. Not upset, but discouraged a little bit by what is going on there. Now, what I'm saying is that when a trader pays £6.99 and want to review a financial instrument for them, all right, within 48 hours, I will send the accurate Elliott wave forecast, okay? It's a short video that I will record to analyze the financial instrument, not more than 15 minutes. Normally, I want it to be 10 minutes, but because I need to talk about a few other things after that 10 minutes, so the maximum length of that video is 15 minutes. So when you receive it, blah, 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 and you can use it to improve your own Elliott wave account, okay? To make better trading decisions. So if, for instance, okay, the way I make it is that if, for instance, I send you the review, you say, George, this is useless review. I don't like this. It's a waste of time and waste of money. Just don't worry too much about it, okay? You are entitled to ask for a refund. Just send me a very simple email. George, okay, that's it. George, I would like to ask for a refund for this, okay, a review. You can write just, George, I would like to ask for a refund for this review. And that's it. I will refund you straight away. I will refund you, okay? And everybody's happy. The risk is all to me because I record a video, I charge you. You don't like it? Well, you give it back to me. You keep the video, and everybody's happy. I'm not upset with you. It doesn't mean that you cannot ask me later on to review another financial instrument for you. I will review again for you. All right? But if, but don't push it too far though, because if somebody, we send him a review, you say, I don't like it. We send another one, you say, I don't like it, you ask for review. Another one, you say, third time, you say, I don't like it. That person will be, we need to put that person's name somewhere and watch that person so that next time we say, all right, it looks to me that you don't like our review. go and find another service instead of wasting our time also, so we can stop the person. But if, for instance, you ask for a review, you don't like it, you can ask for a refund. Doesn't stop you to ask for another review for another financial later on. Okay? Again, we will do it for you. Okay? And you are entitled for a refund. The reason why I want to give traders full refund without asking any question is because, you see, that's what they're doing. So we are talking. They're going to bring it here. So they're useless. All right. All right. So, because I was thinking to take the second trade, and okay, all right. Okay, so the reason why I'm giving to traders the discount is that because traders will be paying $6.99 for each review. So you see how far you run fast? You see? This is what I was expecting. You see? This is it. You see? That's it. Now they start coming out. You see? Oh, that would be nice trade, very fast, 530 is now at 66. All right, very nice trade, very fast. You see, this is what I was trying to catch, and they just try to waste my time and want me to give back my profit. And I'm not prepared to do that because today I'm in very defensive mode, as you can see. So that's the end of this tutorial. So I'm giving the reforms to traders because they can come back anytime and ask for another review. Or for instance, a trader may ask me to review 10 financial instruments for them, or they are working for a firm, or they are trading firm, and they say, Joe, would you like to review 10 financial instruments for us? So I go and review them. They say, George, we don't like 3 of those reviews. We don't accept them. Maybe they use it or it didn't work for them. Okay, they can say, can you refund those 3 for us? And I will just refund them, boom, without thinking of it. All right. So it keeps the relationship goes. When they are not happy, they get their money back and they are happy. When they are happy, they smile or they go and donate to our website. Say, George, well, with that review, I make a lot of money. Or your review, you give me 5 reviews and I make money consistently. Or I want to support what you are doing on YouTube, on your website. And they say, all right, here is the tips. Especially the American people like to give tips. Okay, other people should learn from American people because the American people give tips a lot. Yes or no? So this is it. So you see, there it is. They bring it there, and they didn't allow me to join them. Those are greedy, bullish traders. Somebody was trading here like a donkey. Honestly, the person was crazy. That person who sold it here, when this kind of thing was pushing it above, even having it there, that person is crazy. That person is crazy. You didn't see the triangle. You see my triangle? Do you like my triangle? That's what I'm talking about. It's a triangle and you run fast. Did I say before it happened? Yes, I did. You run fast and you see where they brought it? That's it. End of the day, almost done for today. All right, so this is the end of the tutorial. The time in London is now 3 minutes past 8. All right. So thank you for watching. You see, that's it. They bring it back to the starting point. This is the phenomenon coming off of the triangle, running fast. Now we have another triangle here. It's running fast again. It's going on all the time. This is the Elliott principle that no one is talking about. So this will conclude our discussion today about precision guided Elliott trader is at its scalping Dow Jones on 3-minute chart. Happy trading to you all, and I will speak to you soon. Okay, before we go away, what has happened today? So our wave count is 1, 2, 3, 4, 5. Remember that then we have a flat correction. Okay, so the price action that we see after our flat correction, I will call it like a bit of exaggeration. That's the way I'll call it. So for those of you that are zooming into the Dow Jones, so at this stage, some speculative Elliott trader will go again. 1, 2, 3, blah, 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 blah. Okay, that's a speculation. But what you need to do is to go again to that 4-hour time frame. It's coming back into that region of that tail. You see, this is the tail amount. You see, that tail that we were talking about. So we are back in that territory now. So One thing that one can do with this candlestick bar here, around 12 p.m. London time on the 7th of August, all right, this is it, this candlestick bar of 4 afternoon, one can highlight the 50% Fibonacci retracement of just the tail. You remember I did it before with the Fibonacci station, 138.2% of just the tail. Just apply Fibonacci retracement to just the tail and highlight the 50%. I think we are now above that 50% level. You see, that's the black line here. We are just going above it nicely now. So there is a high chance, talking about the consolidation play, that there will be buyers coming in this region. That doesn't mean that the price cannot go down. You see here how it gapped down. So naturally, we are expecting it to go back up. If tomorrow the market open again, which is Friday, all right, remember that Friday, if you are scalping, all right, or day trading on Friday, don't wait too long, because usually Friday is very short market. Though the market is open as normal, after 1 hour or 1 hour 30 minutes, it's all done. People are going for their weekend, and you don't want to be the last person playing around doing all kind of things unless there is a major economy news. So this is the characteristic of trading on Friday. So probably tomorrow I may not record anything, or I may come and take one trade just to talk a little bit more. All right, maybe for 10 hours. No, that's not true. Maybe for 1 hour or two, something like that. Okay. So thank you for watching, and I will speak to you soon. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Happy trading to you all, and I will speak to you soon. I'm a bit disappointed that I was not part of this action here. Anyway, another day. 2 hours, 11 minutes. The financial instrument that we are analyzing today is the Dow Jones Index, my beloved stock index. Very fluent, very friendly financial instrument that I highly recommend to day traders and scalpers.